Stock Talk live stream. I am your host, Jesse, and we got Bacon with us today. How's it going, Bacon Memes?
It's going. How you doing?
I'm doing good. I'm
Yeah.
doing good. Have you been following earnings season at all?
Oh, I've been in the middle of midterms myself, so just
Yeah.
plodding along. Yeah, there's a lot of things going on.
Yeah. I've been keeping up with it a little bit, but usually I let earnings kind of like wash through and then I'll go back and listen to some calls after a week or
Yeah.
two. But yeah, I've had my own little projects that I've been doing around the house and whatnot. So I haven't been paying too much attention. I did see that, I think Google's down around 6% after hours because they beat and people didn't like their report on cloud, I guess. So at least that's what the interwebs say. So I'll have to listen to that call. The Microsoft is up because I guess cloud was looking better than expected because of some AI tailwinds. So Microsoft up about 3%, 4% after hours.
Yep.
And yeah, it's just kind of we had Crown Castle report right
I
last
think so.
week,
Yeah.
CCI.
Uh,
So CCI reported and they took a nice little dip for a little bit.
mhm.
What was it? Yeah, I think they were around went from 90s to 85, 86, and I did take a little nibble around 87. So
Hey.
that was like my sweet spot, and they reported it went right into it. So I didn't really see anything that I wasn't expecting. So I've kind of been waiting for 80s for a while. So we'll see if I build that out big or how big I build it. But that was a fun one.
Mhm.
Um, and then shoot, ARE reported yesterday, right? Um, they took maybe a little bit of a dip. I'm still waiting for. I think I had Alexandria in the mid 80s too. Was when I was like a bit more interested in them. So it's looking a lot better right now than it was the last couple of years, though. That is for sure. Um, yeah. Do you have any thoughts on any of those?
uh, REITs. I'll admit my ignorance here. Like I'm
REITs, tech,
yeah.
anything,
Okay.
anything. It could
Yeah.
be biotechs.
Yeah. REITs, I'm just banging rocks over here. At best, realistically, I'm eating rocks over here. Big tech. That being said, though, yeah, big tech. I just let the indexes that I hold, or rather index, just do my heavy lifting on those. Um,
Yeah.
it is interesting because anecdotally, with Google, there was a podcast that I listened to where Monesh Prabrai was host or not host. He was guest on Meb Faber's little podcast that he runs.
Oh
And
yeah.
yeah, according to Prabrai, and I know some people love to dog on the man. I don't know why because he's got a great mustache, but uh, yeah. According to Prabrai, he said that he spent a little bit of time with oh shoot. Bill Gates, there we go. And he asked
Mm,
Bill Gates, like, hey, like out of all the big tech players, who do you like as far as like R&D, or like, who would you go long? And according to Pabrai, he was told, quote, he didn't like how Google, or Bill Gates didn't like how Google did R&D, and maybe that will play out in the long term. But again, this is quarterly earnings, way too early to see. Google's a monster. Like let's be real here.
yeah.
Yeah, yeah. So hard to say. I mean, Provide did get Meta right. So score one for Mustache Man. So
Yeah.
yeah,
Boy, wasn't he like and maybe I'm making this up. I know he was really into Micron, right?
yeah. He was.
Wasn't that like one of his biggest, if not his biggest position for a while?
I want to say so, but I don't really like look at
I
super investor
wonder,
like holdings
yeah, I wonder where
information.
where he got in on that because I
Yeah,
know like like if it was a recent thing, like Micron's been an absolute
Oh yeah,
dumpster fire.
yeah, yeah,
But if it's one of those things that like he held for like a super long time, like he could have
yeah.
done really, really well on it.
Hmm.
If he was, yeah, if he was getting it back in 2016, obviously he's
Yeah.
still up a ton, but
Oh yeah.
I don't know how recent he was super bullish on Micron.
Yeah.
But yeah, man, with the big techs, man, I don't know. They're already such a big part of the index allocation, like SPY or VTI, that
Yeah.
they have to get super attractive for me
Hmm.
to buy into them.
Yeah.
But if they do get to that point, like I at the same time I don't mind making them a decent size allocation. So
Yeah. Yeah. Right price. Why
um
not?
yeah,
I
like
mean, happened to Meta not that long
yeah,
ago.
Meta. Yeah, my top three holdings, even in the individual side, are Meta, Google, and Amazon.
Yeah.
And I think, yeah, I think, well, Meta was stupid. I thought 150s was going to be a great pricing,
Mm.
and then it got down to like 88 or whatever,
No.
and
Yeah. Yeah.
that was insane, man.
Yeah.
I think they were trading at like operating cash flow yield of like 18% or something like that.
Yeah.
Just like it was so dumb. Um, but yeah, so I think I between Meta, Google, and Amazon, and I would actually like to add more to Google and Amazon if I can.
Hmm.
Um, they would just have to dive down a decent amount because I don't know if I'd want to average up on them where they are right now.
Yeah.
Given their large index allocations as well. So
Yeah.
I think my average on Amazon and Google are like 95 and 98. So um, who knows? Maybe we get another downtrend year for tech or something like that. Because
Crazier things have happened.
this has been the year for tech, man.
Oh yeah.
What's the 1 year look like for Google? Oh, this is bad
We.
scaling, but
But we.
80, 83 or so.
Yeah.
Yeah. But um yeah, so we'll see. I think we got Meta tomorrow. That'll be really fun.
Hmm.
That'll be really fun. Did you see the attorney general lawsuit against Meta?
Oh. Yeah. I heard
That just
news
got
of it.
put out, right?
Yeah, I heard news of it. That being said, though, I'm again, I'm no lawyer, uh, but like I do have some like big, like conceptual and broad strokes concerns with all the big tech names. I've been wrong before. We'll see if it plays out the way out my concerns uh, would suggest. That being said, though, like again, they're phenomenal businesses, so you know, they could still plod along even with or without, legal pain, regulatory pain.
Yeah. Yeah. It'll be interesting to see if that can start slowing down the momentum. It seems like Meta just hasn't given a crap about anything going on lately.
Yeah.
It's just been ripping, man. It's been like really relatively strong compared to the market.
Yeah.
Um, so I don't know. We'll see if they can deliver a beat tomorrow and gap up. That'd be pretty nice.
It's funny
Um,
though because I can't remember who said it, but I want to say someone said that Zuckerberg, like back when Meta like really got punched in the face hard, like you referenced the price movements earlier that Meta experienced, and I want to say someone pointed out like Zuckerberg realized like, oh, with Meta at these low prices, the structure of like who holds Meta shares are generally speaking like more long term and patient, and maybe it's playing out that way. Maybe there are some mechanics there that aren't necessarily financial statement fundamental, but again, I
yeah,
don't know. I don't know if that's necessarily the case.
yeah. Foo Hat. I dig Microsoft. I like it a lot. Don't
Yeah,
like the price.
yeah, yeah,
Um, it falls into that category of I think it's around a 7% allocation in the SPY. So if we look at VTI, So it's about a 5.7% allocation in VTI. If you
Very
pull up
good.
SPY, it is around. It's going to be the same, if not a little bit higher, I think.
Yeah, probably a bit.
Yeah, about
Yeah.
7% allocation in SPY. So I like Microsoft a lot, and that's why, like, if it came down to one of those areas where I think I could reasonably expect like a 17.5% KGAR off of reasonable assumptions going forward, I would overweight it still.
Yeah.
From the SPY, it would have to dive down a pretty decent amount. And I want to say, gosh, I'll have to look at my watch list, but let's see. I want to say it was like 2 something that I would be interested in it. Yeah. I think it was like 230 or 220, and it briefly got there, and I didn't
No,
do anything. I think I was too busy buying Meta at this point.
probably.
But it briefly got there. I didn't take a stab at it, and then it just ripped up. So I mean, yeah, if Microsoft, I need to probably update my model on Microsoft and see what my new points are. But if it got into a good level, Microsoft would be one that I would look at overweighting a little bit compared to my SPY allocation. But yeah, it's just pricing. I'd have to get a nice healthy pullback on it, I think.
Yeah.
So right now, price wise, all things considered, price wise, I'm much more interested in Google and Amazon than Microsoft. If I what Apple was Apple continuing to show weakness? Kinda.
I mean,
I remember it,
very
it
recent.
pulled back.
Yeah.
It pulled back a little bit, and it just
Yep.
kind of has been ugh. So we'll
Yeah.
see if we get a better pullback in Apple too. Because man, it would be nice, but like I don't know. We'll see. they're they're companies with very very diversified revenue streams that are going to be very very consistent, and they have great margins, and they have a lot of power, so they're going to be priced accordingly. If we get a narrative change and some fear and stuff, and these guys pull back decently, it's something I would definitely probably take a stab at. So dun. And let's see. So with that being said,
Yeah.
Bacon,
Yeah.
you wanted to talk about your beloved stock that you love so much.
All right, so for the viewing
So
audience, yeah, full disclosure,
we're gonna have some fun today,
yeah, oh
guys.
yeah. I do own this stock, like, so I'll get that right there out of the way, into the open. That being said, though, the only reason why I brought this stock up is not necessarily because they report earnings within this week. Like, that is true. They report earnings pretty darn soon. Um, so, like, normally a YouTuber would say, let's hype, let's pump, let's make some predictions and go from there. But no, that's not us.
No.
No, but like, because I approached you, like, behind, like, letting people in behind the scenes. I approached you saying, hey, like, I'm only referencing this company because there are some companies from time to time that hold some sort of asset that is not related to the core business, but it could have value going forward. How would you try and value it? And maybe there's a way. And if you can value it, how would you attempt? If you can't, that's fine. We'll just explain it to the viewers. Hopefully, everyone has value add, and we can be sensible even with a speculative position of mine, because this is speculative. It's positioned as such. Let's pump the brakes here. Let's not go crazy or go wild or anything like that. You know.
So I did not like really model this out at
Mhm.
all
It's fine.
beforehand.
It's
So
fine.
we're just gonna kind of like talk through it now. I
Yeah.
guess do you wanna give like an overview on just Overstock as a company,
Sure.
since
Sure. All right.
you kind of
So
follow it?
yeah. The core business of Overstock. They are e-commerce, obviously. The, should we can even see thanks to financial model prep. Consumer cyclical. Their take on e-commerce is Dropbox model. So management has said this in the past, like they like their gross margins around 20-ish%. Their words, not mine, believe it or not. uh, and they like doing that, as we can see, with the website that you pulled up. They recently acquired Bed Bath and Beyond's IP and customer list for about 21 million ish, 22
I didn't.
ish.
I did not realize that they're redirecting Overstock.com
Yeah,
to Bed Bath and Beyond.
yeah, that happened August 1st. Originally, they
Yeah.
started it with Canada for a little trial period. They were bummed out that, like, with their rollout, that they didn't get, like, back to dorm students, basically.
Oh
Yeah,
yeah. I
so
missed that
like,
timing a bit.
yeah, yeah, yeah. So this stock has been punched in the face real hard, given recent price movement, because they acquired Bed Bath and Beyond IP like 3 months ago. Um, and again,
Yep.
they just implemented the U.S. side, August 1st ish, thereabouts. And about a month ago or so, the stock price, like, I got to ride the wave up, and then I got to get, like, take losses on the original. I'm still in it. Yeah, because they said that year over year revenue dropped like in the mid teens. So
Mhm.
not
So
fun times. Not fun
when
times.
did you establish your position? I'm curious.
About I want to say about a year ago, actually, thereabouts. Yeah.
Okay.
Yeah, so again, like, I'm doing fine. Like, again, this is speculative, positioned as such. So, like, it could go to zero. I wouldn't be happy, but I wouldn't really, like, ultimately care. Like, there are far more important things in my life than this little one. But yeah, we'll talk about what makes it speculative.
And that most likely means that your allocation is small and in check, and you're
Yeah,
not risking anything that
no,
you're not
no,
afraid of
yeah,
losing, right?
yeah.
Well, did you take out debt on your credit cards that are your emergency fund and put it all into Overstock? No, you didn't, because you're
No.
not a dumbass.
well, well, different type of donut here, but uh, yeah. So I don't know. Did we want to cover any more ground with the core business, or the thing that makes things a little quote unquote spicy? Uh,
Megan said he will. He said he will never financially recover from the stock. That yeah, it's true.
thanks, Dan.
Bed Bath and Beyond, the
Yeah.
grave. Oh man, spooky,
Yeah.
spooky.
Uh,
Um, okay, so the core business, obviously, we can see it like, and
yeah.
I have
It's.
followed this company a little bit.
Hmm.
I don't have like a ton of like in depth knowledge. I
Yeah.
would say like I would say I have a good understanding of the company.
Yeah.
Obviously, they went through like a huge COVID boom through
Oh yeah.
2020 with
Yep.
everybody staying home. Um, Buying stuff for their houses, like getting antsy. Everybody had not way too much money. They were flush with cash, right? Because
Yeah.
you can't go out, you can't do anything.
Yep.
So people were, renovating houses, getting new furniture, stuff like that. And we saw just a massive tailwind to their revenue streams. They became profitable, I think, for a bit in that 2020 area. Yeah, we can see they
Yeah.
had
Yep.
profit right here for a while. So they were basically unprofitable coming into about 2020, but it looks like their margins were improving and they
Hmm.
were limiting their losses a little bit. And then obviously COVID happened and then just they took off the races, like
Yeah.
insane amount of growth. Like look, I mean, was there any acquisitions or anything? Because that's like
I don't.
100% revenue growth. That's
I
over 100.
actually, there
Jesus.
might be, but that would be probably more
Let's look at
speculative
the
side.
balance sheet. Do we have any
Yeah.
like
Goodwill. Yeah, I was gonna
maybe
say
a
it.
little
I
bit goodwill intangibles on
Yeah,
2020, but
probably the speculative
anyway,
side. Yeah.
they had a huge boom because of COVID. Like increase their margins to be able to be profitable. Um, and then everything just kind of winded down,
Yeah.
and now they're basically negative the last couple quarters, burning through their cash, and that translates very nicely into what we see with this stock just an absolutely insane rip. It was getting talked about a lot online, on like different YouTubers talking about it,
Mhm.
covering it, and hyping not only the core business but other parts of the business that we're going to talk about here in a second.
Yeah.
So, let's get into uh the kind of, we'll say the option the
Oh dear
option
God.
the stock options,
Yeah.
their side bets.
Yeah. Some
Um,
people would like to say it's a built-in call option.
it's a built-in. It's like
Yeah.
buy one get one.
Yeah. Yeah. For want of a better term. All right.
You buy a bed, you get a bath, you go beyond.
So, so for the people viewing, if you want to do your which I encourage everyone to do their own research if they're into that sort of thing, is Overstock has significant holdings in thing called Medici Ventures, also called another thing called Pellion Partners, specifically T0 is one of the other key things. Um, you know I get that the words blockchain, crypto are, tokens are pretty much taboo. Like, that hype wave has come and gone by and large. Let's ignore Bitcoin's price movement at the time of recording. uh, uh, but like, what makes Overstock, a weird contender in this is that with T0 specifically, they've partnered with ICE, which is the Intercontinental Exchange. They may own a little thing called New York Stock Exchange. Maybe people have heard of it, maybe not. The for frame of reference, all right, this is why I'm a little interested. Is T0's Twitter, believe it or not, I set up a little account with them. Never put any money, but had an account with them with T0, and they sent me an email. Their Twitter actually, like, up and out of the blue, like early February or so, sent out a message saying, "Hey, retail customers, basically, we're going to have your customer accounts, go into custody, and they'll be released back to you. We're basically getting out of the retail facing side of our crypto space." Come to find out, about a month later, if we remember March of this year, a certain company called Coinbase got a Wells notice from the SEC. The timeline is awfully suspicious to the point where it's like T0, it's like Overstock has a part ownership in a company that has grown-ups in the room that, is able to actually work with regulators and have something productive. Now, that being said, I can't give any clear timelines of when T0, when Medici Ventures or Pellion Partners turns into real tangible cash flows for Overstock. Uh, that's like, shoot, with the Bed Bath and Beyond acquisition, management even said that they're suspending any projections with simple margins for the next few quarters. Like, they said that last earnings report. So we're gonna give it a go. Jesse's gonna give it a go. I'll just be banging rocks over here. Uh, but
I
again,
don't know if I'm gonna give it a go.
but again, like, this is the thing that's speculative. Like, but it's speculative with what appears to be grown-ups at the table, where they know that they only got one shot at this. They got to measure multiple times, cut once. Uh, and we'll see if this goes like in theory. Though they are partnered and positioned very well. Uh, Medici Ventures, not that long ago, I want to say it was August. They had equity raise with a thing called Grain Chain. Maybe that turns into something. Maybe not. So again, it's speculative. It's speculative. It's positioned as such for me.
So
Um,
if I remember correctly, a lot of the stuff that they worked with on kind of the blockchain wasn't
mm,
necessarily investing in cryptos or anything like that, but
no,
actually
no, no.
using blockchain technology to actually solve real world type
Yeah.
of issues, or like how they can use blockchain to produce a product that would solve an issue. So like I
Mhm.
think were they also invested in a company that was doing some type of like um, voting solution using blockchain technology
I want to
for,
say so. Yeah.
yeah,
Yeah.
polling and stuff like that. And then I looked into T0 for a while, and I was pretty super I'm really interested in T0.
Hmm.
Um, because what I found with T0 was it basically wasn't really like, they didn't see it being like, oh, we're gonna sell
Yeah.
crypto. Really, it was like, it was more of a way for, say, a small business to more quickly securitize ownership in their company and sell it off and raise capital.
Hmm.
So instead of going and listing and dealing with all the regulatory issues on the New York Stock Exchange or NASDAQ or whatever,
Hmm.
you could go essentially to T0. They could underwrite you,
Yeah.
right? You could securitize ownership of your company. You would submit all your documentation, and then investors could look over those documents, and then T0 would essentially be the broker and provide the exchange between the buyers and the sellers for, um, basically stock in the business that you're trying to get liquidity for.
Yeah.
So, and I mean, I'm fairly certain, like, I think that's why um ICE is so interested in this, right?
Hmm.
Like, that's kind of what could really make this. um Now, as cool as all of these concepts are,
Yeah.
um we have no idea what type of financial payout, if there
Yes.
is even going to be a financial payout for this type of stuff, right?
Or one.
Yeah, or when. So not only do you have, like, you don't know if it's going to actually produce cash flows. If it does produce cash flows, can those cash flows be put back into investors' hands? How long is it going to be?
Hmm.
Are they going to be burning cash just for a long time? Like, it's just, it's rough. This is one where you're more likely. I don't know, man. If I was looking at this, I'd be like, okay,
Yup.
it could go to zero,
Hmm.
and you're trying to almost gauge, like, sentiment around it, and when you think momentum is potentially going to pick up, and you can ride it a bit. But, like, it would be something you'd have to really keep your allocation super small, speculative, and even if it hit, I don't think it'd be one of those that, like, if I was up 100 or 200%, that I would keep around.
Yeah.
Like,
No, I
I would
definitely
have to
understand.
I would have to see, like, some serious backing to be able to keep it around.
Yeah.
Like,
Yeah.
they're super profitable. Their forecasts and their guidance are showing really good. Like, they proved out monetization and profitability of, like, some of these bets, and everything's stabilizing. Like, so much would have to happen to turn this into, like, a long term hold.
Hmm.
Um, but yeah, so that's like the thing with stuff like this. You got to don't buy into the hype,
No.
because there's always going to be something um, that is going to be kind of pitched, and people are going to get hyped up about, and then you buy Overstock at like $60, um, you know, because it's in a dip, and then it gets down to 15.
Oh yeah. It was funny because like originally I thought like we'd talk about like also the like relatively safe agreement on the core business, but even then though there's some decisions where we also don't really like, or rather you don't like, and I'm at best lukewarm.
Yeah, so
Yeah,
let's talk about those decisions.
yeah,
Um, I know we started talking about one of them. You
yeah.
go ahead and take it.
All right. So, I think like a lot of people can agree that Overstock, the brand name, historically is implied. Hey, we're a liquidator vendor. Like so that actually, believe it or not, hurt them as suppliers weren't willing to give them all that much of their inventories to work with end customers. because no one wants to be associated or viewed as a liquidator supplier or like going into liquidation. So bad,
You
bad,
want to buy
horrible
the
brand.
stuff that
Yeah,
nobody wants.
yeah. So horrible brand. Well, whereas Bed Bath and Beyond, decent enough brand name, but their business model of overly bigified coupons, not that great of a business model. So we'll see how this company goes going forward. They said that they would try and have competitive prices while couponing for the roughly 2 to 3 ish quarters going forward, and we'll see if they're trapped on that treadmill or if they're able to do what they say and slowly build out their customer base, because they gotta be careful with spam filters. They're slowly
Now,
building out their customer base and going from there. Yep.
they just bought out like the IP, right?
Yeah, like 3 months ago, thereabouts.
Yeah.
Yeah.
So when they were doing this, did they have like, did that include like some of the, I don't know, staples that Bed Bath and Beyond offered, or did they have to come up with like their own categories for like what they're offering in like, um, I don't know, bedroom and bath furniture and stuff like that?
It seemed like they had to renegotiate with suppliers, but it seemed like with their new brand, though, they were able
They could
to,
take it pretty
yeah,
easily.
they could actually get the
Okay.
suppliers as opposed to before. But
Because
mhm.
uh, originally I was not thrilled when I heard that they were going to be rebranding to just Beyond.
Yes, and they're
I
in the
thought
Zillow.
it was
I agree.
stupid. Like
Yeah,
I thought that was stupid because like
yeah.
when I first saw that and it's like rebranding to Beyond, and I just glanced and I saw Beyond and I was like,
Yep.
Beyond Meat? Like
Yeah.
what? What
Yep.
what are they doing? Like I think Bed Bath and Beyond is
Mhm.
such like a, I don't know, like everybody knows that.
Yeah.
So like why not milk that? And
Mhm.
then um just push the, I don't know, push the Beyond aspect on your website,
Yeah.
which this kind of feels like it's what they're doing. I just don't know why they wouldn't lean into that really fully,
Yeah.
unless they think that the brand has been um I don't know, tarnished enough to where they wanted to get away from it.
Yeah.
Um, but yeah, I do like that they're going away from Overstock.
Yeah. Yeah.
Um,
Yep. But
yeah, I
could it
would
have been
probably
done
just say
better? I agree. I agree. It could have
yeah,
been done better.
I would say probably I would have just stuck with Bed Bath and Beyond
Same here.
and like
Same here.
not rebranded out of that. But
Communicated focus to the customer and the investor base. Like we
so
can attach multiples and margins.
so have they talked about how much of a cash drain this is going to be? Because they're
uh
mostly doing drop shipping though, right?
yeah,
So
yeah,
it's
yeah, yeah.
pretty,
It's
it's
drop
kind of
shipping.
inventory light.
Yeah, yeah. It's asset light. Like, and they've reiterated that throughout the whole process. So at least that part of the business model probably staying the same. Hey, doggos. But yeah, the as far as like a cash drag goes, that's anybody's guess. Because if management suspended projections on margins, like, I mean, for right now, the balance sheet is okay-ish. There's far worse balance sheets out there, but going forward, though, yeah, that's anyone's guess as far as any sort of cash drag or cash burn.
Yeah. Sorry
Yeah.
about that.
No, you're good. You're good. Yeah, because 20-ish
No,
gross margins, not great.
dogs don't like the
Minimal.
mailman or the male woman. Um, yeah, no, that was like, so my concern looking through this immediately was like they were just in a cash burn state for the last like what, year and a half, 2 years.
Mhm.
Um, and they've just been depleting that cash like constantly, which um I'll just I'll use this as an example and an opportunity.
Mhm.
Sometimes you see people being like, "Oh, well, like they don't have debt and or they have low amounts of debt and they
Yep.
have like a, like whatever, like $1 billion on hand." Um, like if you just look at the cash on hand, like, "Oh, it's like dirt cheap." And I'm like, "Well, you got to judge how likely that cash is going to be to get to your pocket.
Mm-hmm.
Right?
Oh, absolutely. Absolutely.
And if a company has $1 billion in cash, no debt, but they're burning 200 million a quarter or whatever, and they don't give a F about like, I don't know, like getting, I don't know, they're too focused on growth. They're not being super good capital allocators, kind of being wasteful. Just because a company has a ton of cash on hand doesn't mean that, in some cases, that can kind of trick people into thinking it's safer than it actually is.
Oh yeah. Yeah.
So, and we saw that with a lot of like small caps, new company small caps that raised a decent amount of cash or debt early on in like 2020, and then just burned through it in a couple of years and went bankrupt or close to it. So my biggest concern at this point though is like, what type of cash burn run rate are they gonna have as they go through this? And they're getting to the point where, you know, they've gone through 200 million or so in a couple years. Is their cash burn to be 40 mil a quarter? And when's that going to actually turn around? Because they are going to have to shoot, and they didn't really dilute too much since they did the cash raise, it looks like. But yeah, I mean, they were profitable until about was that Q1 2022, and then unprofitable.
Yeah.
If we go ahead and edit chart, we're gonna remove this.
Ain't no party like an unprofitable party, because an
That's
unprofitable
right.
party don't start.
So yeah, it's weird, and we can't see that they were making some progress. I want to say, in this age right here, this like 2017 to 2020 area, they were going away from actually storage of goods, and they were moving more towards drop shipping. And
Yeah,
that's
yeah,
what
they were slowly implementing that. Yeah,
they were slowly implementing that, which was having a nice impact on their margins. And now we're seeing that kind of fade a bit.
Yeah. We can definitely expect that in the near term. So this speculative position as it is, I can easily see this being at best dead money for let's call it a few quarters. So a few quarters can have consequences for anywhere between a year to 2-3 years, easily. These things happen.
Yeah.
It's fun times for me.
No. Well, so, and that also begs the question is like, do you subject yourself to that risk? Or do you say, you know what, I'm really interested in this. I think this could be really good. I'm just going to keep a close eye on this company and look at every report. And then hopefully I see things switching to where I really see like the bull thesis is playing out and they're going to reach profitability really soon. And it's like right on that cusp. And price hasn't run away from me. And now's a decent time to get in. I think that's sometimes what I have not a hard time with, but like that's sometimes what I'm realizing I would rather do in positions where I think it's like way more speculative. Because you're right, like this could be like they have to execute very well.
Yes.
Or this is going to be dead money for a long time.
Yes.
And like dead money, like if not going down, like dead money is just as bad as like losing. So much money if you can make 5, 7, 9% in an index or whatever. Let's see. So I don't know, man. So
yeah, it's perfectly fine. If it can't be done, it can't be done.
If we can try to value this, I think the discount rate is going to be pretty dang high. I could almost do like a 22.5% like target rate, just because just because there's so much risk in it. And then right here we're doing basically like trading in line with pretty much the risk-free rate, like so pretty much a really tight multiple. But I think in the bearish cases we could probably build that out a little bit more and say like it trades at a discount, just because honestly it should trade at a discount. I don't think there's any reason that this should trade at like tech margins or whatever, unless T0 really starts pulling through and they are on something way bigger than anybody suspected. So like, I don't know, like this could trade at a pretty dumb low multiple. Like, oh my god. Dilution, maybe we say that they don't dilute, or dilution is low. Let's do actually 11, and then we're going to normalize, and that's going to kick us into where we're actually going off of profitability. Because if we weren't hitting profit numbers, like obviously my model would just break because it doesn't project dreams.
Trade market.
Bed Bath and Beyond, when we're in your head. But let's see. So if we get into the income statement, we can kind of see they were rocking around the best of times. What was like 30 mil a quarter?
Yeah.
So like maybe from a bottom line perspective, do you have any like targets that you think they could reasonably get to in the next like 5 years? Like if they had a certain amount of growth with some margin expansion, converted a decent amount of the customer base from Bed Bath and Beyond over to like, well, I guess their website now, but it's Bed Bath and Beyond's website too, or it's branded that way.
Best case as far as like bottom line margin, but still within reason, I'd say maybe 10 to 15% tops. Because like going off of like management's previous guidance with gross, like my rationale would be they've said 20-ish% gross margin. Let's just say for their gross, but like let's just say we bump it up to 30%, realistic, but still generous. Shave off another half on that for SG&A, then we'd call net income about again that 10 to 15-ish%. Again, at best.
Okay.
Yeah, best, but again, being realistic, somewhat.
Yeah.
Realistic. Yeah.
So in that case, I mean, they're probably at about maybe.
Feel free to push back on me on that.
75, dude. I don't know this company, man. I'm just going off of what you're saying.
Yeah, we're just plotting along base case here. We're saying that the call option doesn't call.
Well. So here's the thing, like it's kind of, I don't know. It's interesting because like we are now in a very, very unfavorable environment for them, right? With interest rates being higher, cost of capital being higher, squeeze on consumers. So it's possible that their revenue numbers go to like below pre-pandemic numbers, right? So maybe they're only doing like, I don't know, 250, 300 mil revenue a quarter or something like that.
Yeah.
So what I was initially thinking is like, okay, maybe like best case scenario, they're able to get to like 100 mil bottom line per year at the end of 5 years. And that would probably result in like, maybe a little bit of margin expansion. Well, definitely margin expansion on the bottom line, but positive profit margin on the bottom line, a little bit growth, and maybe they could reach that in maybe, I don't know, their best case scenario. So if we try to do that, what is, that's way higher. I don't know, but and that's why I wanted to ask you, because I didn't know what like you know this company way more than me. I don't know if that's something you would think would be reasonable, or if that's a way low ball, or what you would say.
I think it's reasonable. That being said, though, is it guaranteed? Well, whatever is guaranteed. Is it likely? Hard to say. The reason why I say that is because there seems to have been some movement. There's a gentleman by the name of Marcus Lemonis, uh, who just got a board seat. Some people really like him. Some people uh, don't like anybody who's ever been on CNBC. I just view that as, hey, it seems like that there have been signs of movement with this company in both core business, speculative, and from a shareholder perspective. So it's for me, it's far too early to say for sure. Like it,
Yeah.
yeah, that's why it's speculative for me. But if it was anybody else with their own money, I'd probably be even more careful with their own money and say, hey, like, you could probably just chill on this one. Like, plenty of other things to go with and not apply
Yeah.
brain damage.
Yeah. Yeah. No, and man, it's just yeah, I don't know. Like the if we look at something like that where they're doing maybe in the worst case scenario like 70 mil at the end of 5 years, best case scenario is about 110 mil
Hmm.
at the end of the 5 years. Pretty much very low amounts of dilution, around 1 to 2%.
Yeah.
The biggest thing is that like the multiple for this could be anywhere.
Yeah.
Yeah, you
Yep.
don't know.
Yeah.
Like it could be absolutely anywhere. Like it could if it's hyped and T0 hits and that ends up being a bigger tailwind than thought, and it gets a lot of, I don't know, recognition for that, and the profitability and revenue is deemed to be extremely stable from whatever they have in place, then maybe it trades in line with like great or like a tech company or something like that, right?
Mhm. Yeah.
Because it has that stability. If it's just a retailer,
Yeah.
like
Oh. Oof. Yeah.
like I don't know, maybe you're trading at a PE of 10, like 12. I don't
Yeah.
know. Like so trying to project price off of those type of things is like
Yeah.
really, really hard, at least in my model.
Yeah.
We've got a pretty big margin of safety target rate, 22.5%.
Hmm.
And as you can see, like, and I, first off, I would say to me, if any of these scenarios played out, that would be a good scenario. So like my my scenario one here is like a very good scenario in
Yeah.
mind, because I could put scenario one as in they burn through their cash pile,
Yeah.
they
Yeah.
have to
This thing
raise
is
capital, they have to
DK.
dilute, they're
Yep.
not profitable at the end of the 5 years.
Yep.
Like
Yep.
it could be really bad.
Oh yeah.
And
Yeah.
like in that case, then like, it's worth probably nothing.
Yeah.
Um so, but let's just say like if we assume 70 to 100 mil in net income, pretty low dilution, and a very wide range of multiple scenarios at the end of 5 years, we basically get like a target price at the end of 5 years of $15 to $76, right?
Yeah.
So
Yeah.
it's like, I mean, if you're really wanting to adhere to a really, really high margin of safety, then you're looking
Mhm.
at maybe like a $10.
Yeah.
But like this is one of those, man, that like anything that doesn't have stable cash flow and
Hmm.
profit,
Yep.
um, the market could go like this next time it reports, and it could trade down to like $7.
Yep.
You
Oh
don't know,
yeah. Yeah. This
right?
thing is. It's already been a wild, wacky ride. I
Yeah,
mean, shoot, there's been precedent with this one because this Overstock came out around the same time as Amazon, and obviously we have two very different,
it's no
trajectories here. Yeah,
guys, it's no Amazon.
no, definitely not.
Beyond hyperscaler.
Yeah. Uh, that being
Oh
said,
my
though,
gosh. Oh,
like I
I will
gotta.
say, sorry, go ahead.
Oh, I was just gonna say, like, for this company to have had a crazy CEO, like crazy in a bad way. Like CEO founder, and it's still plugging along. Like I would say that this company has a healthier balance sheet than Wayfair, at least from a naive glance. Uh, but this thing has been plodding along. Like
Yeah.
if you thought that Overstock was going to go BK, like you probably would have been closer to right. But it's still plugging along. Like this entire time with
Yeah. Yeah.
all the craziness that's happened. So credit
Yeah.
to
No,
companies that still keep plugging along.
they have been able to survive for a long time,
Yeah, yeah.
and the nice thing of, as they're going more and more to that drop shipping model, it's going to become more and more asset light.
Mhm.
They're not really going to have too much inventory.
Yeah.
So that will help them. Yeah, I mean, we'll see.
Mhm. Oh, yeah, for sure.
It's just one of those where, it's highly speculative. It could be anywhere.
Yeah,
You don't know what's going to happen in the
yeah,
next 5 years. Like it could be $2. It could be, 150. I
yeah.
don't know. Like, um,
Shrug
yeah,
emoji.
crazy. um, but yeah, so it's one that, if I was interested in it and it would definitely be a speculative position.
Yeah, yeah,
Pretty, very, very, very low
yeah,
allocation,
yeah,
just because it's so hard to
yeah,
predict this.
yeah.
If you guys have any questions, put them in the chat and we'll do a little Q&A too. And we'll go over some stuff as well before we break. And yeah, before next week, I guess. I think it's been like 2 weeks since I did a live stream. I've been
I think so.
slacking on it. I've been slacking, y'all. I'm sorry. I haven't really done any videos or anything. I've been getting ready for ski season, doing some mods to the van to get all our ski gear mounted and whatnot. And yeah, so I don't know. I might be a little quiet this winter. But oh man. Yeah, Tractor Supply. What's TSCO at now? It's
Don't know.
That's one that I've like have been watching for a while.
Mhm.
TSCO. Where are we at? Pulling back a little bit.
Yep. Pull them back.
Oh man, we're gonna. I feel like we should just call these like the dividend stocks. You got like the John Deere, Tractor Supply, McDonald's, like the dividends. Oh man, I think Agco as well.
Yeah,
Agco's
yeah, yeah, yeah.
solid. Yeah,
He's interested in some names that other people are interested. Like
lots of solid names.
oh yeah, yeah,
Lots of solid names. Like
yeah,
it's like solid companies and industries that are gonna have most likely long term that are like somewhat reasonably priced with long term tailwinds.
yeah.
It's a really good combination.
He
Um,
he probably wants me to shut up about it, but we both found out that we were in the same stock together. Ended up getting
oh
acquired.
yeah,
It was funny. Yeah, it was
oh I
completely by
remember that.
coincidence. Yeah, yeah,
I
purely
remember that.
coincidence.
Yeah,
Yep,
that was funny.
yep.
Then we can talk about Crocs, man. Dude, Crocs
Hey,
coming
Crocs.
out with them boots.
Yeah, yeah.
Those
A
cowboy boots.
certain respectable mutual friend that we both know has been like on top of it as far as like certain like limited product lines just selling out or effectively selling out.
There we go.
It's just crazy.
There we
So,
go.
yep.
There you guys go. Crocs cowboy boots. The one and only. Um I- telling people I think these got released yesterday
Yep.
and they're pretty much sold out of any like,
Yeah. More
normal
sizes than not.
sizes.
Yeah.
$120 for a Croc cowboy boot. Dear Lord.
Yep.
Oh my gosh, I should go buy more Croc stock. If they can sell that out in like a day,
Yeah.
jeez.
Yeah. It's great
Insane.
times.
It'll be interesting to. Oh, you can pay later. Oh my gosh. Ah man.
Yeah.
Oh, the other one that I wanted to talk about that I personally am very very interested in right now.
Hmm.
And I'm very interested to see what their
Oh
returns
yeah.
look. They
Yep.
made such a large downside move off of
Hmm.
a competitor's report. It was Enphase.
Pew.
Oh, and people people I talk to, people in Discord, which shout out, Discord link below. Like, subscribe, all that good stuff. Financial modeling prep discount link below. That is a what? I might get a kickback for that, so thank you. But man, I've been waiting for Enphase for so long to hit 120, and like my two areas were like 120. I'll take a little nibble. 80, I think, is where it starts to get really interesting, like super interesting. So 80, and like I'm kind of like preparing. Maybe we see 80, maybe we see 60. Um, whew, oh, this will be. I think Enphase would be one that I think I would build out. Not huge, but to a decent sized allocation.
Hmm.
But with the momentum being so strong to the downside right now, I just want to make sure that I don't rush into it too quick.
Yeah.
And it is going through a cyclical time. It's going to have short-term headwinds. I think it is going to be a longer-term winner, or at least it will be one of the, I don't know, survivors in the space longer term. But yeah, whew, man, it has gotten absolutely demolished, and it's been such a beautiful sight. Such a beautiful sight. Are you interested in the end phase at all?
It's on the radar.
Yeah.
It's on the thing. Yep, yep. Because
Dude,
that's.
remember when we were talking about shorting it at 300?
Oh yeah, I remember that.
I
What a
think I
shitty
even said, I
setup.
was like, dude, I could buy puts
Yeah.
here, and then I'll just cover and actually buy the stock around 80.
assuming assuming that the
Oh my
creek doesn't screw
god,
you
that would
on
have
it.
been epic.
Yeah, yeah. It would have worked out.
You gotta get the timing so perfect on
Oh
those
yeah,
though.
yeah.
It's so hard.
Oh yeah.
But yeah, Enphase reports, I think, in 1 or 2 days. And the reason that they went down so much was on their competitor report that their competitor was really struggling in Europe and seeing a slowdown in Europe. The interesting thing in my mind is that Enphase was just starting to break into Europe. So the question becomes, okay,
Mhm.
did their competitors slow down in Europe because all of Europe is slowed down, or is their
Or
competitor in Europe slowing down because Enphase
phase.
broke into the market
Yeah.
and is taking market share? If
Mhm.
it ends up being the latter, like, the market didn't price that in,
Yeah.
right?
Yeah.
I'm hoping I think it's going to be a mix. I think it's going to be like Enphase is getting some market share in Europe, but it is a slowdown. So it's like tamed, and it's
Mhm.
not going to look like anything crazy. So I think most likely, I don't think this is just going to jump up to like 120 or 150 after earnings. But it wouldn't surprise me. It wouldn't surprise me because the market isn't always right. So it'll be very interesting. Sitting at about 24 PE right now. I want to say their LTM operating cash flow yield is about 7% right now. Net yield is about 4.16, and their their growth has been obviously really good over the last like several years. But they're going to go through a really bad pullback this quarter,
Mhm.
just from trying to get that inventory sold out before they restock their suppliers. So typically, I think how Enphase realizes their revenue is they realize it when they sell it to the supplier, I want to say,
Mhm.
and the supplier has to then churn through that inventory to
Ah.
before doing reorders, right?
Yeah.
So um they have a couple new product releases. um they've told in their last guidance, they told everybody that they were going to be churning through a lot of that inventory, and they're wanting to do a really hard drop in one quarter and then resume.
Mm.
Um, so if we get a combination of like, yeah, they're breaking into Europe and they're starting to do decent, but it's nothing amazing. The Europe market is slowing, and potentially they haven't churned through all that inventory yet, and they're going to roll that into the next quarter, and the next quarter is going to be forecasted weak as well. I think that's when we get like, okay, maybe we would flush down to like 70, 80. And that could be like, oh man, that could be fun.
Just
That
imagine if they announced big capex.
Oh,
cherry on top.
Yeah. So I don't know. This is one that I would love to just establish a decent position in. I think like my allocation is super small right now. Individual portfolio, I want to say, is like 1.6% or something like that. But at the right price, I think I'd push it up to around 5, maybe 7.5%, and let it bake. And then just try to keep capital available to where if it got really silly, got into the 50s or something like that, like right now I'm kind of thinking like 60 or no 80, 60, and then maybe another chunk lower than that. But yeah, it's nice. It's easy to be patient when cash counts are paying 5%.
Oh yeah. Very easy to be patient. Yep.
Crazy. All right, let's see if we got any questions. I don't know if you've been keeping an eye on chat at all. You guys talking about Monster? Well, I'm drinking a Monster.
Yeah.
We might. Is Monster dead? Is it dead? Or are you dead that I'm drinking Monster?
I know Snapchat got mentioned earlier, way earlier.
Yeah, Snappy Poo.
Yeah. Random funny thing. Last I looked at the Snapchat website, their company website says Snapchat is a camera company, which I think is hilarious because, like, why would you say that?
It's the Kodak.
Yeah.
It's the Kodak of 2023. I think if I'm trying to set up a live stream between me and somebody else whenever they have time to do a deep dive, or a not deep a discussion evaluation on Monster, because I do like Monster a lot. It's just pricey. So
is it someone I know?
Yeah.
Hey,
I think everybody knows him. So
okay. Yeah.
We'll see. We've chatted about it here and there, but schedules have been kind of crazy. So if it lines up, we will do it at some point. I obviously I like Monster. So and this stuff is actually pretty good. It's not like, it doesn't seem like horrible for you. It more seems like a vitamin B drink. B3, B6, B12. Does not a lot of caffeine. A little bit of sugar. No, actually no sugar. So we'll see. Is it a mindset? Oh, it's a mindset. It's the Monster mindset. Fuhat, you might be right. Man. All right, guys. I think that's gonna do it for today. So hope you guys had a great week. Have a great rest of your week, and we'll see you around.
Oh, wait. The disclaimer, though.
Oh,
yeah.
We are not professionals. We are not financial advisors. We have no formal educational training in this stuff. This is for entertainment purposes only. That's how you should view it, because we dumb. So, yeah, for real. Peace.